NJ Show. I hope everybody's doing well. Throw some comments up. Let me know in the comments how everybody is doing. Let me know how everybody's doing. What's everybody up to? We've got a special guest with us today. One that we tried to bring onto the show a couple of days ago, but NJ's tech sometimes is a little bit flaky. Sometimes it works well, sometimes it doesn't. But we've been lucky enough to bring this special guest back on in the same week. I hope everybody's doing well. Throw some comments up. Okay. All right. We know that we're live now. We know that we're live. Very, very good. Very good. Let's get some comments going on, guys. Let's get some comments so I can see already. Phil, the Flying Frenchman, thank you for waking up early and joining the stream, brother. Appreciate you. And Stephen here says, good afternoon, everyone. Greetings from London. Fantastic. Local boy. POGO says, let's go, champ. Smash the market. And whoever is watching, smash the likes and subs. 4K incoming. Wow. I wish I could star you or something like that, PO. That's a really lovely comment. David says, good morning. And KAR Crypto, good to see you, my friend. I'm glad to see you're consistently working hard. You're turning up to all the streams and you're putting the effort in. Keep it up, my friend. Keep it up. Good. All right. I tell you what, we're going to go straight into it. We're not going to waste any time. I'm going to bring on CryptoBirb. CryptoBirb, my friend, how are you doing?
Doing good, man. What's good? What's up?
Yeah. It's such a pleasure to have you back on the stream. Thank you for tuning in. I'll tell you what I'm going to do very, very quickly. I'm just going to let the community know that we're live now.
Cool.
So if I do this and I'll say, okay, so I'm live with CryptoBirb now. There we go. There we go. Just paste that into the Telegram and we will kick the show off. Fantastic. So CryptoBirb, thank you very much for joining the show. I do apologize for a couple of days ago. You did make the time to come and speak to this wonderful community that we have here. And unfortunately, just due to some technical difficulties, we couldn't for some reason make it work. But you're here now. The background looks good. The video looks good. Talk to me, bro. How are you doing?
Yeah, thanks. Yeah, last time, at times, basically, I guess, is just uh, the tech stuff that happens, right? Countless times that I had really, similar stuff. So it happens. Yeah, other than this, I'm good. Beautiful weather, and in Portugal always.
You're in
Myself,
Portugal.
I'm Polish, but I actually am based in Portugal right now. Yeah.
That's hard. I respect that. Portugal. Oof. That looks like a nice
It's
place to be,
it's
bro.
Yeah, it is. I mean, the weather is great. The ocean is amazing. Actually, like it's all processing, but because it's fresh, right? So I'm back and forth. But there's this beautiful spot, a village, if you will, right at the ocean bay. It's called Ericeira,
Hmm.
and this is like a surfing spot, right at the cliff, at a little bit of a hill, right? So you get this beautiful ocean view with a cliff, with an actual beach where there used to be some world championships for surfers. So
Okay.
it's the best thing about it is, I guess, that there is like really relentlessly stressless life, as in, when you've, of course, that's not me right there, but I can imagine that one day, when I just feel like doing this, or taking my family there to settle. We could all kind of like sit, in those cool, easy, spots, local spots, restaurants, or what this kind of like vibey place for surfers. Just grab a cup of coffee, grab a drink, have some French fries, and just fucking chill for a second, right? Not really worrying about anything.
You know what? You just said something there that's an excellent segue into my next bit. So, look, for the guys who are joining in now, guys and girls, this is why I like CryptoBirb. Notice how we've been on the stream now for CryptoBirb's been on the show now for a minute, and he's immediately said one thing that's resonated with me completely. He's used the keyword family. He's a family man, right? But at the same time, you know what, CryptoBirb, it doesn't make sense. If you're a family man, if you're somebody who is focused on your family, you love your family, you're doing X, Y, and Z. How are you so involved in this crypto game? This crypto game takes hours of the day. So if you don't mind, could you give us an introduction to these lovely people here who are leaving lovely comments, by the way? I'm seeing that they love your beard. They love your beard, bro. You know what I'm saying? Please give us an introduction and tell us a bit more about you and what you do.
Cool. Yeah. I wish my beard was a little bit better trimmed, though.
It looks
But
good, bro. It looks good. These guys are loving it.
I appreciate it, man. At times it's funny, but at times, when I got this mustache and it overgrows a little bit, it needs to be conditioned, needs to be trimmed all the
Yeah,
time.
yeah, 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 yeah.
And I would never ever do it myself. I mean, there's just some tiny trims I would do, but that I try to visit, once every couple of weeks, months, if you will, to my favorite barber for like five,
Hmm.
6 years straight. So he would be just I would just sit down right there at the barber chair, and then I would tell him like, listen, I'm closing my eyes, do whatever you feel like. And he knows the style, he knows the goal, he knows the aim. So I just relax
Yeah, yeah,
for
yeah,
half
yeah.
an hour, close my eyes and gets my beard trimmed. But other than this, of course, at times it gets this irritating when it overgrows a little bit. It
Yeah,
gets right into your nose,
yeah,
right?
yeah,
Your
yeah, yeah.
your,
I know what
your
you
beard
mean.
looks really looks kind of like conditioned, well trimmed, and at times I feel that you could grow a really long beard. For me, it's kind of like starting, to kind of like get, this I don't know how to call it, like shattered right there at the very end. It needs to be conditioned, it needs to be trimmed to look
No, it
good.
looks good,
So
bro. It looks good. Look, I tell you what, yeah, there's another bull market. I believe that there's going to be another bull market. It should come back whenever it comes back. When it does come back, we'll look sexy as we need to be, bro. Do
there
you
you
know
go.
what I'm saying?
Maybe
Last bull
maybe
market,
my
I had
hair
a
grows
slit.
back. Yeah.
Last bull market, bro, I had a slit in my eyebrow. That was how you knew that NJ was in bull market. Otherwise, why would I have a slit in? Do you know what I mean? But
There
I
you
tell you
go.
what, please introduce yourself to these lovely people. We got
Yeah, by all
48
means.
people here. Like the video, smash the subscribe button. CryptoBirb is going to introduce himself. Go ahead.
Cool. So far, that's been an intro to my beard rather than myself. But like, my name is Adrian. I guess that very freshly I should be introducing myself as CMT, as Adrian Dunchuk CMT. That's my kind of like a legally obliged, name as a technical analyst. And this is because I've recently got, designated to become the only CMT charter market technician from Poland, basically. So I passed my exams. I did, years of studies, infinite amount of books read, on getting technical analysis right. And it's, of course, never going to be, a point where I just cross a line and where I just, meet the line and say, okay, that's enough of learning for me. I just need to keep pushing, keep moving. The markets are dynamic, and that's what basically kind of like, again, makes me pursue different learning ventures, just like the CMT. It makes me grow, and I try to share, some more valuable insights on Twitter as well. I've run my Twitter basically for like 5 years. I'm counting over 5 years. I am also the founder of the trading community, as known as the Birb Nest, ever since 2017. So it's quite some time already. Co-founder for Yellowblock. Um, I also put in my bio recently my latest purchase of the Board AL Club as well, 90/20, if it matters at all. But other than this, my main background is chemical technology engineering. Uh, pozdro. Apparently, this guy's Polish too, so pozdro. Uh, yeah, cool, and I'm really really excited, guys. To get you some good value insights, benefits. Perhaps you can already get ready and take away and implement it right after stream.
Definitely, definitely, definitely. So, do you know what? The main concept of this show is I wanted to show these guys. A lot of these guys that watch this show, they're watching other shows too, and they're really heavily focused on the lower time frame for Bitcoin. They're more focused on how many R they can capture in a day. They're more focused on what the price action is going to be for the day, and it's difficult for me to make them understand 2 weeks of the bull market. If you prepare for 2 years and you have 2 weeks of a bull market, you'll make so much more money than you would if you were just trading 15-minute time frames throughout the entire bear market. And I went through this myself. In 2018, I lost all my money in 2018. I made such a good amount of money in 2017. Even I thought I was an expert by the end of 2017. 2018 came along, I lost all of it. I went back to the office and it was difficult for me. So I want these guys to understand, what it takes. Like, we're normal people, just like these guys are. these guys are good guys. I have good things to say about them in the chat here. They're always leaving positive comments. At the same time, I want them to understand the value of what hard work actually is, and hard work sometimes does take a lot of time to 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 come to fruition. You know what I mean? It doesn't just happen overnight. So, I guess I'm gonna ask you a few questions that are kind of wider, higher time frame, if you know what I mean, as opposed to lower time frame. So, number one, let these guys know what you think. Do you think that there's going to be another bull market for Bitcoin?
Mm, yeah, I mean, not right. I mean, it's as simple as that. There is a bear market. There's unless somebody puts a stop to what Bitcoin is and what it stands for. Perhaps regulators, you never know that. Then unless they do this, I don't see a reason why Bitcoin would eventually stop trading or would just go numb or dead. So that's it's. I think it's an entire beauty of the markets that they would always go up and down. And if it's in the form of an emerging market, right, that it keeps growing, keeps ascending on average, then those cycles, are going to move up by a little bit every single time higher, right? So that has been the case with Bitcoin so far. Not a single cycle is exactly the same as the other one, right? So you get certain similarities. However, well, typically people will try to anchor to the exactly same patterns that I saw, in the last cycle and the last day, last month, and I would try to take it and extrapolate it into the future. And typically, it does not really work this way. The markets are not really persistent. The Something that we know as an entropy, this inherent chaos disorder that we have within the markets coming from too many variables, makes it oscillate in an unpredictable way. So there is not a single point in future. I used to believe that, but I don't believe that anymore, that you could tell and say, oh yeah, then on the 5th of October, um, I probably give it because it's my birthday date. But on the 5th of October, imagine there's like Bitcoin going to be literally at like $53,000, and the RSI is going to be 78, and then we're going to have a 53% decline, or whatever all this stuff would follow. So I guess the biggest surprise, just like you said, are the times when the markets trend, when they burst out in these violent movements that just keeps persisting and moving in one direction. This is what catches many people off guard, and makes them counter trade, fight the rally too often, and eventually, when everybody's making money, so to speak, those will find themselves, losing entire rate of their wealth, and that is the biggest curiosity that I think, as long as you keep digging, keep grinding, keep learning, eventually you'll have it right. Eventually you'll understand this enough to be profitable.
100%. I mean, I couldn't agree with you more. You covered a lot of ground there, but the general consensus is something that I agree with completely. Whereby we're waiting for a trending market. A trending market is the easiest market to trade, especially if you're early. If you're early and you're getting into those violent moves to the upside, you're going to most likely capitalize on a massive portion of that. And this is the thing. The one thing I've noticed that's very similar between this bear market and the previous bear market is in 2018, in 2017, we had the hodlers. The hodlers came in and they made so much money holding all the way to the top. And in 2018, we had a birth, and I was part of that birth, right? Of traders, people who wanted to learn price action, people who wanted to learn trading. When 2020 came along, we had the COVID crash. After the COVID crash, when Bitcoin and the rest of the markets started pushing upwards, violently upwards, that's when I saw the result of all the work that I had put into it from sort of 2016 all the way to 2020. That was when I truly saw the result. And I'm noticing that we have the same thing now, where 2021 gave us such a euphoric spike. It really gave us the dopamine rush we were looking for. And now we're in 2022, and we suddenly have a sort of a birth of a new set of traders, people who want to learn price action, people who want to learn the direction of price. So it's, in a way it's positive, in a way it's negative. I personally am of the opinion that crypto. You mentioned this earlier on at the beginning of the show where you said, what Bitcoin stands for. That was one line that you used that I kind of held on to in my head. And what people don't understand is, obviously, if Bitcoin is going to start pushing up for its own merit, for its own reasons, what it tends to do is it tends to take the rest of the market with it. Ethereum goes up, and then all the projects that have some sort of value below Ethereum, they start pushing up too. The rest of the market starts going up. You have other ecosystems that have projects below it that start going up too, and suddenly you have what we define as an alt season, right? So, one thing I would say, one question I will ask is, in between these bear markets, what do you do in these bear markets? Do you trade the 5 minute time frame of Bitcoin all day, and are you desperate to look at price and desperate to know what price is going to do that day? What do you do in the bear market? Let's say, for instance, if we removed the let's say, for instance, we take your Twitter account from 650K and we put it back to zero. Let's say we take your YouTube from 100,000 subscribers, we put it back to zero. What would you be doing in this bear market to make sure that you succeed in the next bull market?
I guess the answer is plain and simple to me because, I will keep learning, right? And as generic as it sounds, I'm definitely not the most intelligent person, that you're going to meet. I've got so many way more intelligent friends, who absorb information so much faster, so much better. They have their brain capacity apparently at so much higher levels, but I would always kind of like keep grinding in terms of like not stopping to learn, right? And I would keep digging for new ideas, keep, of course, building, the businesses inside. But trade focused, I would definitely open up a book, a new book, something that is a challenge, something that is new, not just to reassure me something that I already know, but rather dig into new and, broaden some of the horizons. There is this brick book I have. I actually have it somewhere. Um, yeah, it's by, yeah. I just had to check if I had it on the shelf, but I
No,
was.
no, you're good. You're good. You're good. The importance of reading
It's
is important. Yeah.
yeah, 1,500 maybe pages. It's Barry J. Kaufman. This is about building trading systems and strategies. And eventually, that what CMT gave me, this entire certification path. Of course, like, I don't give a, too much damn if I were to say, about the title itself. The title looks fine, but it, again, just like with what you mentioned about Bitcoin, it's what it stands for, right? And it stands for these years of education that I put in, right? That took me basically through the infinite amount of pages, of learned stuff. And it, as long as you keep grinding, keep learning, I will keep repeating that. But then you will truly discover your own kind of like brain deeper, more deeply. As in, before I started learning the proper way, technical analysis, right? I would not really know my own internal psychic process well, right? I mean, there are of course some, there is this greed theory, some really common stuff that you see flying all over the Twitter and on the internet. But it's truly so much deeper, right? There are so many different processes going on in the mind that behavioral finance lays out really well. There was a question. By the way, I appreciate all the love, guys, and comments. Love back to you.
Comments are lovely.
Thanks.
Keep the comments coming in, everyone. We really appreciate it. What is the name of the book, if you don't mind me asking, Bab?
Yeah, yeah, I was supposed to say that. Look for Perry J. Kaufman. Perry
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 J.
J. Kaufman. Kaufman. Kaufman,
Uh,
just like, just the way it reads, I guess.
do you think you could do you think you could write that down for me? Because I want to write it in the chat, but I don't
Yeah,
think
yeah,
I'm gonna
sure.
spell it. I don't think I'm gonna spell it right.
Uh, Trading
A lot of
system.
we got a lot of a lot of valuable insights from CryptoBirb today, and really and truly, guys, I wanted to bring him on just because of this. Um, I know a lot of you guys are really, really obsessed with price at the moment, and I can't explain how much you guys all remind me of myself from 2018. You guys all remind me of myself, and I wish, whatever I achieved in the last bull market, I just wish that I had focused more towards crypto. And you know who's a good example? Trader XO. He's a great example because I remember in 2018 when I was focused on traditional markets, I was focused on price action, I was purely focused on just understanding how to trade, support, resistance, ranges, trending environments, ranging environments. And all I really needed to do was just take those same principles and just apply it to crypto. And that would have led me to much further gains in the previous bull market than the ones I already got. I'm very grateful for what I achieved in the last bull market. It's just it could have been better. It could have been far better, and I aim to make sure that I do that in the next cycle. So, Burb, do you know what? We've been on the show for 20 minutes now, and everything has been complete alpha so far. Do you have any thoughts on Bitcoin at the moment? Do you have anything that you might be able to share in terms of? Would you mind sharing your screen and showing some of us what you think for Bitcoin? Would that be all right?
Yeah, man, by all
Oh,
means.
fantastic. Okie dokie. So, everybody in the chat, leave us some comments, drop some comments. Let us know that you're enjoying it. Let us know how you feel about all of it so far. Let us know if you're learning anything. And if you are learning something, please feel free to subscribe to the channel. Bottom right hand corner, make sure to like the video as well. CryptoBirb's about to share his screen, and we're going to look at some Bitcoin.
Let me know when it plays out.
Uh, yeah. So, if you want to just jump to the chart, there we go.
Yeah, can you see the screen? What I'm displaying right now?
Yeah. So, we're on Twitter at the moment, and it
Yeah.
says here.
Yeah. I have those charts, so I can bring them in a second here. But in honesty, I just
Yeah,
wanted to make
definitely,
a
man.
quick.
Feel free to share whatever you want, bro, and just give us a little narrative as to everything that you're sharing, if that's all right with you.
Cool. Yeah, that's the point. Yeah. So this is a weekly chart. I have it in the other bookmark too, but this is the weekly chart of Bitcoin, and it basically again shows this entire large consolidation, kind of like slowly pacing upwards movement, of 2021 to 2022 until we actually fell into the bear market, right? And I think that understanding the market context, defining the trend, is always the biggest struggle for so many traders, apparently, from what I noticed. And this is mainly because people tend to confuse different time frames. And confusion of timeframes comes from not understanding them well and what they stand for again. And this all starts with understanding that trends, and everything in nature, in all honesty, those are fractals, right? Fractals means that when there is a straight line, somewhere, and it zoomed out, eventually when you get closer, when you zoom it in, you see that this straight line is shattered. It's basically irregular, right? It's not ideal. And the more you go inside, those tiny little pieces, bits and pieces, of those lines which are shattered, you're going to discover that on the micro basis, on a even lower level basis, you're going to see each and every single of those lines is even more shattered and irregular, right? And this is exactly what happens with trends as well in the markets. And is that okay if I lay down a little bit of
Go for it, man. Go for it. I'm listening. I'm one of the fans at the moment. I'm listening and I'm learning too.
Cool, thanks. So, just like you have this moving average over here, right? It stands for 50 weeks of average price action, basically, for Bitcoin. Right now, 50-week basis on Bitcoin tells you it's going to be somewhere around $40,000, right? It's right there at 30, 39, $40,000, well, approximately. We may even take it here. Uh, then As this average data shows you the actual trend, moving average is a synonym of trend, right? Shows you the smoothed out, noiseless result of what the direction of the market has been and what it potentially may be heading. So we as traders have this natural built-in kind of like tendency to extrapolate, right? As in we see that there has been this a little bit of declining, trend on 50-week average. 50 weeks is basically virtually a year. So on a year basis, you're looking at an average decrease of Bitcoin, right? And you would try to automatically your brain works it in a way that it would search for certain patterns, and these patterns, as in you connect the dots, right? You see that there has been this upwards trending movement. There we go with arrows. This upwards trending movement, then it would start flattening out, inflect, then it would start curving down a little bit, right? So you would naturally take the very latest data sample, the very latest points, and try to extrapolate it in the very same direction, and that becomes your expectation, that becomes your assumption. However, uh, the very beauty of this whole thing and trends is that they consist of smaller trends. Just like I said, primary trends, as in bull markets or bear markets, are going to consist of smaller trends, right? Of something that builds this big one line, and just taking it with those moving average trend, which represents again a yearly trend tendency of the market. You're going to notice that it's going to have its all ups and downs. It's never going to be just trending with one single price for an entire year on average, right? So all of these oscillations again will consist of even smaller trends, right? Eventually, so that you kind of like get down to lower time frames, right? Scroll from higher time frames to lower time frames to like 5 minutes, and eventually you start understanding that what you're looking at is mainly noise, right? I actually made a reference to this. I had this tweet, because it's going to be probably easier to explain it. But eventually, you come to understand that there is nothing but noise on lower time frames. So you asked me about if I traded, on smaller time frames like 5 minutes. Of course, I'd been there, I'd done that. I lost so much money on trading, counter trading. I made all the mistakes you can think of. And what I'm sharing right now is basically all the years, the results of all the mistakes that I made. So here, the lower the time frame go to is that the lower efficiency ratio you have. There is this Kaufman efficiency ratio. The Kaufman is the author for the book that I recommend.
Yeah.
And he's like, funny thing, this is a very very important side note. This guy was a rocket scientist. Like, I'm not sure if he worked for NASA or for some other organization, but he was like a literal rocket scientist, and he would fall in love with math so much, and with statistics, that he would try to incorporate it in trading, in finance, and eventually in the to build the more quantified theory behind technical analysis, right? Because TA, what I use is just one of the many kind of like angles you can look in the markets, and while fundamentals are all about what's happening around the market, right? TA looks gives a deeper look inside of the market. So you have this FA context, this larger fundamental context that needs to be, of course, some well assured, as in the economic policy, the macroeconomic factors, the stage of the economy right now, that we're in the recessive phase, and that there are basically like some geopolitical wars going on, and so on and so on and so forth. So that when you take this bigger surrounding and take it and jump into the market, you're going to actually have and stand, in front of what technical analysis means, right? It doesn't teach you about the outside of the market. It teaches you only about the interrelation and interreactions between the markets inside the market, right? And it took me so many years to figure it out. And I would often use so many words that I would never understand the proper meaning for. I guess the best practice, of course, every time I meet this such a word, I try to Google it and learn. And I would really pay a lot of attention to understanding definitions. As in, if there is a single word I don't understand, I just don't kind of like ignore that, right? I probably will Google that and see and try to understand what that is.
Yeah.
And otherwise, I would, if I asked probably, random people in the street, uh, what they think of, I don't know, Bitcoin, what they think of technical analysis, or what, even if you go and enter a room of in a conference with technical analysts, I'm pretty sure not everybody will be able to explain what technical analysis is per se. They would
Yeah.
tell you like their feelings, they would tell you what it does, but it won't tell you what it is, right? And
Hmm.
understanding what a thing is actually is a good base to start digging and learning more, and learning more. So here, having this reference to Per J. Kaufman again, he would bring this form of measuring inefficiency in the markets known within the Kaufman efficiency ratio, and it's going to tell you basically how much of a trend there is in a trend. And it may happen that there is virtually close to zero trend in a movement, right? As the market just would keep moving in those random walks, which are basically nothing but noise. When there is no persistence, trends are all about persistence. When there is no persistence in a direction, it's going to just chop around, right? And it's going to take out stops, get you nothing but whipsaws, all the time, and then you're going to get every time stopped. In the past, I would never understand why the hell I would get stopped so many times in a row. How is that even fucking possible, right? But then I would understand that it's mainly because I traded too low time frames, and that I was trying to trade using technical analysis, which is answering some statistical edge. I would try to apply that in the markets on such a time frames that would have no statistical edge. When there is random walk, when there's random noise, and there's no persistence, no, those are just literally random movements, way more than not. Then your statistical edge by using technical analysis basically disappears, right? There is no trend, there is no persistency, there is no persistence. I mean, there is no, like, nothing that you can refer to, because it is complete chaos. That's where the entropy is high, that's where the chaos is high, disorder is high, that's where the efficiency ratio of a movement is low. And for it, you would not apply trading strategies, but you would apply gambling strategies. Gamble basically gives you like a roll, a dice roll, or playing roulette. It would have a very limited to no statistical advantage, right? As in
Very strong
any
what
roll.
you're saying there. Very strong what you're saying, and I think for those who don't understand, what Burb is basically saying, to summarize it in one sentence, is if you don't have a strategy, and a strategy can come in many ways, right? It doesn't have to be one specific strategy. There's a lot of strategies that work in this game, but if you don't have a strategy, then what's happening is, without you realizing, you're actually gambling. You're adopting, like, there is no matter what you do, there's going to be a strategy, right? Whether you're using the difference is whether you're applying a price action strategy, a technical analysis strategy, or if you're applying a gambling strategy. Sometimes you might not even realize, but you actually be applying a gambling strategy. Kind of like, people who have no religion. Well, atheism is a religion too. That's a belief system too. Do you know what I'm saying? So similar. Sorry to interrupt you there. Please go ahead and continue. I just wanted to make sure that these guys understand. This is quite deep stuff that you're talking about.
Yeah, yeah. Sorry, I tend to ramble a
No,
lot.
don't apologize, man. This is lit. Keep going, keep going. This is live.
Cool. Yeah, so I of course agree with what you said, right? I believe that, again, gambling. I used to have this pejorative understanding of gambling, as in that it's bad. But I'm not saying it's bad. You can make money of gambling. There are many amazing poker players, and they have no statistical edge per se. There is no trend. There is no persistence in what cards they pick. It's completely random, right? So that's the entire point. When you have this random kind of like price action oscillations on lower time frames, and that's the only thing you get on lower time frames, then you would have to approach it as a gambler much more than as an actual technical trader. No technical indicators are going to use you're going to use, because there's too much noise, and they would trigger too many signals, and all of those signals would be fake, because they would bring no persistence, no follow through, no
Bias
an actual
driven.
breakout.
Yeah, bias
Exactly,
driven.
right?
Opinion related. Yeah,
So
yeah, yeah.
yeah, so that's the point. I mean, when you apply the gambling strategy on lower time frames, it's fine. And there are many gambling strategies. There is a thing that we know as martingales, where you would double down on every loss. As in, imagine you have a 10,000 starting account or something like this. You take a first position of $1,000, right? And you lose it. You roll a dice and you lose the bet. You play long and it actually cuts you off guard and you lose. You get liquidated or something. Then, when a loss occurs, you double down on the next trial, right? So on the next trade, you would take that $2,000, and when it loses, when it closes your position and loss again, you liquidate yourself. You repeat that, and put in $4,000 eventually. You double down. You keep double down on every loss, and there's a time that eventually it's very unlikely for you to have very big amount of losses in a run, in a one run, in a row, right? It's there is this theory of runs. It's basically the probability is multiplied, as in you have 50% chances of being right. Let's say you roll a dice or play a roulette, black or red, whatever, and this 50%, eventually when you have 50% chances of being wrong in the first attempt, then you have 50% of 50% chances, which is 25%, and then you kind of like lower 12.5%, on the third approach, and 6 point whatever 25, on lower time, or even less approach, right? And more takes on doubling down, and eventually this probability of being wrong after 20 takes is so microscopically low that it works in your favor if you keep doubling down. Of course, you have to have a lot of money in your pocket to afford this, but eventually, when you keep doubling down, there will be a time after 5 or 10 runs, maybe of losses, that you are going to make it back with a premium on top of everything you actually lost, right? So there are many strategies to it. There are many equivalents. You can try to adapt it with trending markets as well. You can try to do the opposite, as in uh, the thing that is called anti-martingales, where you would double down on every win. So let's say you win, you double add on your position, right? You win $1,000 position, then you would add, next open or add to the position $2,000 basically, and then you would double that as well, right? 4,000, and eventually it's not going to work this way, probably this well, because you're going to be left with the high. If you have a winning streak, a winning run of 10 wins, then again, the probability of you continuing to win is going to decrease, well, geometrically. And it means that basically, uh, that eventually you're going to end up with tiny little chances of winning with the highest stake put at the table. So the biggest risk with the minimum chances of winning. Eventually, that's what we're getting, left with. So it's very, I should say, you can really gamble and make money off lower time frames on futures, but it definitely does not use any statistical edge coming from technical analysis per se. There is no trend. This is just random noise mostly.
Risk management is something that's very heavily um is something that isn't used. I mean, I haven't really done a full on TA series on this channel, but I've done I've done my first video, which is on risk management. I sat down and I thought to myself, what was the most important thing that I needed back in 2018? And I really really thought about it. I didn't want to make it a huge long paragraph. I didn't want to create a trading plan that was 50 pages long. And really and truly, the thing that I didn't have before, which made me realize I was gambling, was I didn't really have a stop loss. And people will get confused. They'll think that a stop loss just means, you know, where you get stopped out. But no, no. A stop loss is where you're wrong on the idea. And it kind of goes off what you're talking about when it comes to probabilities. Sorry, once it kind of goes back to where we're talking about probabilities, right? You're talking about having an edge, rolling a dice, etc., etc. And for me, what it comes down to, just personally for me, it comes down to being able to manage your risk. Because essentially, what is trading? Trading is just an idea. All right. What do you use technical analysis for? Why do you study price action? You're studying those topics because you want to understand probability. That's the reality of what you're trying to do. If you understand probability, then you can start formulating ideas. And if you can start formulating ideas, suddenly you have your idea on one side, you have the probability ratio on the other side. And then for me, what the most important thing is risk, managing your risk. Where are you wrong on the idea? What is your invalidation level? And where can you happily say, okay, this was my idea. This is exactly where I think that I'm wrong on the idea. And this is how much money I'm willing to lose. And I think it goes back to what you were saying in terms of being able to put the work in. If you don't have a consistency rate of being able to put the work in, you're probably not going to make it. And we had Trader SC on the channel the other day, and he said something that really sort of got to me. He said, people who tend to go to the gym and who are consistent at the gym, or who have a hobby and they're consistent at their hobby, those people are the ones who are more likely to make it because they already have that discipline inside of their minds. They don't have a gambler's mentality. They only focus and only care about following the process. I can see you've got a chart up there for Bitcoin. What are we seeing on this, Bub?
Yeah, just with reference real quick to Z, I mean, I'm really good friends with him, with XO, and I got tons of respect for those lads. I mean, perfectly good, great traders. So I definitely agree that discipline helps, and that there are certain not shortcuts, but there are certain, aids that can really help and aid your trading. And this discipline, as in visiting the gym, or before you open up a trade, it's really good that you really have already got certain discipline, manners. So that's what I perfectly agree with. In terms of what I see in the chart right now, this is a 12-hour chart, something that I personally watch, and I watch it mainly because it allows me to have this insight look in what's happening on lower time frames and on higher time frames at the same time. So I kind of like use it as a screen, combining lower and longer term views.
Okay.
About trends and shorter term view, kept talking about so much. And this is somewhere in between noise in it, but it has so much less noise in lower time frames. And at the same time, you can spot certain trends. You can easily tell that there is direction in the market going down, right? And that's what I need. So that's
Oh, Bub, are you there, bro?
from my personally trade. What I do at the time. So it's mainly because markets move in sideways for the vast majority of the time again, right? It will keep moving in sideways, and then it's going to be interrupted by quick sell-off or quick pump, and then another piece of sideways, right? Another dump, another piece of sideways. And that's the reality. Markets tend to move sideways about 70, 80% of the time. And as long as there is no trend and you are a trend follower, which means you are following a trend, but then it doesn't exist at the moment, then it doesn't exist at 70% of the instances. And it means that if you want to push trades based on trends which don't exist, you're going to get stopped and chopped in ranges like that 70% of the time. But at the same time, simultaneously, you get to know and learn that it's really well academically proven and confirmed that the best performing and the most robust, stable, and reliable trading systems rely on trends, right? Because those trends virtually have no limits per se, right? While there is a chop where there is a pattern, there's like a coil or whatever range, trading range bound. It will keep probably moving between certain thresholds, between some lows and highs. Okay, so it means it has limited volatility into it, right? What you gather money with, what you gather money from or through, is the volatility. So you only make money, or you actually make more money than when there is a trend, when there is a breakout, than when otherwise when there's no trend, when it just stays between certain thresholds. So all that is to say that being 30% right, only 30% right, it may seem, of the time, does not mean you necessarily have to lose. In fact, because of the existence of those sharp, violent movements that last very not longly, you get to have this abnormal run in one direction. It's just like similar to what if you roll a dice, right? Then you would, or roll a dice, or that if you I don't know, bet a red on a roulette, that there would be this run of 10 or 20 runs of reds in your favor. It doesn't happen often. And most likely it will happen at one point, but it's just very not frequent. So same thing goes with trends. And this is your edge. This is where you make the most money, right? Just like you mentioned at the very beginning, cutting on wins too early is basically what makes you get rid of this entire thing that you've been working on, right? And for the 70% of the time, you only wait for the trends to appear so that you make money off this volatility which is abnormal, which is exceptional, resistant in one direction and not another. So 70% of the time, you're going to wait for a trend to develop. And most often, I would get chopped in that. I would have series of small losses because they're going to get stop me out on certain thresholds, some ATR volatility based stop losses or some swing lows, whatever. But then when the trend develops and you get caught off the guard trying to short it, you're going to eventually try to short from here, 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 here. And until the trend runs up or runs out of its steam, you're going to get liquidated on your account and blow up your account until then. So that's my point. I mean, for now, for Bitcoin, the way I see it, I, even last year, before I would take up on my CMT3 final level exam, and get this full understanding of what really TA stands for, I would try to have
Congratulations on that, by the way. Congratulations on that CMT. We haven't had a chance to say, but congratulations. That's not a small achievement. Well done.
Thank you so much, bro. I appreciate it. Yeah, but again, all that is just to give me some new context and some new horizons. And when I look in the charts, I stopped really caring about my opinion too much, right? I don't really care about if the market goes up or down, in all honesty, because I know that I am focused on my trading system, which is following the trend based on a certain set of indicators. Of course, I would have my own Verbicator Pro, that is custom made and is eventually really amazingly prepared with collab with Signalify, who designed systems professionally as well for years for funds and whatnot. So it's amazing. But in its very base, like I said, I would wait about 70% of the time. I would wait 7 times out of 10 only to get benefited with the 3 times out of 10 of these abnormal runs. But then when those runs come in, I cover for not only all my losses, but I get that with a decent premium, which actually makes me outperform the rest of the traders. And trading ranges, it may be great if you keep compounding, but it's basically more gambling to it. Like I said, because there is so much more noise into it. There's no direction. There is just chop. So you have more losses. And finally, when the trend develops, and you keep kind of like thinking within the frames and trading within the frames of the range, then you're going to literally, again, without stop losses, you're going to have this abnormal unlimited loss that you cannot control. Because range trading means, you would basically try to rely on either level to level basis or just try to have oversold indicators or overbought RSI to short it. And for some time, you're going to get early, but for the chance of getting early, you're going to get stopped many times as well. And at the same time, you cannot really get stopped because that it would be against mean reversion or rate trading. So here you're left with no stop losses by definition in rate trading per se. This is the idealized example. Of course, we would try the best performing mean reversion trading is in range trading within chart patterns, range bounds, whatever, is virtually with no stop losses, right? Again, of course, everybody would have to check on their own risk preferences. Perhaps it's not going to be fitting well into anybody's ideology of trading at all. But ideally, the range trading lets you resist, or I should say, lasts as long as there is no trend. And it would just, by definition, keep swinging back and forth. And you would just keep repeating buying low and selling high. While trends are about buying higher and selling higher, or selling low and selling low. Buy low, sell high is what we have in the range trading. I just wasted in my own nomenclature.
No, you're good. You're good. You're
and
good.
then you would basically buy higher, right? Whenever there is a breakout. So when it triggers set and break, you would agree willingly to buy in higher for the sake of having this confirmed breakout. So as long as there is move swinging back and forth between the pattern ranges, right, you are going to be right 70% of the time. But then when the trend develops and you get this massive breakout, then you're caught off guard and this big loss, then there's this potential that you gain big loss. And the other way around goes with trends. You get chopped 70% of the time, but then when it breaks out, you're ready and you're positioned. And that's where you
Mm.
best make money off. Oh, Jesus, so much words. So many words.
No, 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 no. You're good. You're good. I think a lot of people sort of fail to sort of understand the concept of the difference between sort of range trading and trend trading, and they're two different concepts. A lot of people sort of get flustered by both of them. uh, in sort of a bear market and an accumulation phase, what tends to happen is, as we've seen already, Bitcoin has gone from 69K to 20K. We've seen 17K even on Bitcoin. So a lot of people sort of forget that a majority of the trend is pretty much done. I expect personally myself for a low to be sort of put in within the next 3 to 6 months. I think that that's a very, very feasible thing to say. I did a video very recently, Burb, where I discussed market cycles. It's probably my best video that I've done on this channel to date, where I discussed the concept of, we have a bull market. It typically lasts for about a year, irrespective of the catalysts. We have a bear market, which is the inverse of the bull market, where price completely retraces. And then we have a year of accumulation, where we kind of go into that place that you were talking about with the range bound trading, price going up and down in a sort of tight sort of area. And then when we break out into the trend, people are sort of unsuspecting. And that's kind of the market psychology behind it all anyway. This is something that we expect in most markets. And I do think that, if we do discover a low within the next 3 to 6 months, I do think that we'll need another sort of 9 to 12 months to really sort of just find that tight range, find that area of consolidation or accumulation. Like you said yourself, that's what the market does 70% of the time. And once we've done that, whichever the catalyst will be, whether it's the Bitcoin halving, whether it's some other sort of technical upgrade for Ethereum, maybe some sort of technical upgrade for Bitcoin. I mean, a couple of years ago, people were talking about the Lightning Network. People were talking about moving Bitcoin to a more scalable solution. It didn't really come to fruition, but it served its purpose. So whatever the catalyst will be, I do think that it will sort of come to fruition within an accumulation period for Bitcoin. And when it does happen, that's when I think we all need to be ready for the trend. The concept of this show, and I'm hoping anyway that we do manage to achieve it, is that we on this show, we don't want to be surprised when the trend comes. We want to be ready. We want to be prepared. We want to have all the knowledge that we have. So from your sort of background, I've noticed that the way that you tackle sort of trading and crypto in general, it's a very scientific approach. I've never actually come across somebody that sees cryptocurrency in the way that you see it, and it's very refreshing to say the least. Very refreshing. So I want to thank you so much, brother, for coming on the show, for sharing your thoughts, for giving us so much information to really really digest. I'm going to need a day or two myself to sort of see it from your perspective. It's a very very refreshing perspective, like I said. Is there anything else that you might want to talk about, or are you happy?
Yeah, yeah. Thank you so much. Great, great words from you, and I
Really,
appreciate it.
yeah, really, man. On behalf of the community, like I said, we've got a really lovely community that we're growing on the NJ show. All the guys and girls that have left the lovely comments that they've left, remember their names, because they will be smashing it in the next bull market with us. And I just want to say thank you once again, CryptoBirb, for taking time out of your day and coming on the NJ show. It really, really grateful, really grateful. I guess one question I have for you before we wrap things up is: will you be coming back on the NJ show to deliver more alpha and more of a CryptoBirb special?
By all means, bro. Happy to do
Okay.
it.
So you guys have
Happy to
heard
do
it.
it.
You guys have heard it. So do you know what? We've got lovely comments in here as well. People are saying thank you. So thank you once again, Burb, and I'll catch up with you in a short while if that's all right with you.
Thank you so much, and love all you guys in the comments. Stay safe. God bless you all.
God bless. God bless. Okay, guys. So that is Crypto Burb with a lot and a lot of very very very, very different information. I've never seen somebody really tackle trading like that. And you know what? This kind of goes back to what I was saying, where I was saying, you don't need to have one strategy. There's multiple strategies that you can adopt in order to get profitable in this game. My strategy is different to another person's, and your strategy will be different to mine. But the main sort of concept is that we separate the difference between a trending environment and a range bound environment. And really and truly, where people are sort of getting smashed up right now is, we're in more of a trader's environment right now. We're in more of a range bound environment where we're getting little breakouts, we're getting a lot of consolidation, a lot of chop, and people who look for the breakout are getting stopped out pretty easily, and people who are looking to trade the range are getting stopped out because we're getting the breakouts. So I'll leave it there for you guys. This might be an episode that you guys might need to watch again, just because it's complicated. There's a lot of complexity to it. And I think there's a lot that we could have learned from this episode as well. I hope you guys did enjoy it. As always, make sure you're liking the video. Make sure you're subscribing to the content. I'm going to shoot off from here as well. Take care, everyone. And thank you for joining the show. Tomorrow, we'll talk more about Bitcoin. We'll talk more about Ethereum. I'll make sure I get some good price action in for you guys tomorrow. So make sure you like the video, share the content. If you haven't already, the link in the description below. Check out my Telegram channel. Join it if you haven't joined it already. I drop voice notes in there. I drop charts in there sometimes. We've got other people supporting that as well. So make sure you do that. And as always, take care. Stay in good health. I will see you guys tomorrow for another episode of The NJ Show. Take care. Peace.